Dear friends, welcome to Weekly View on Markets. Markets have consolidated during this week with positive bias. Nifty gained about 90 points. Market action on Friday indicates bullish undertone of the investors. Market dropped around 300 points in the morning on Friday, but it recouped all the losses and closed with a gain of 219 points. There was a swing of more than 600 points in Nifty. So the buying at the lower level and recouping all the losses and closing with positive gain shows the underlying strength and the confidence of the investors in the market. Charts indicate that this is a buy on dip market. Macroeconomic indicators like inflation has come down to 5.48% in the month of November, and IIP growth is at 3.5%. So these indicate there is a drop in inflation and growth in the industrial output in the month of November compared to October. Government has signaled policy continuity at RBI with the appointment of new RBI governor. This new governor comes from within the administration of the government. The new governor also stated in this briefing after appointment that he will ensure policy continuity at RBI. Markets may consolidate during next few weeks. Q3 results and the upcoming budget in February will be the next trigger for the markets. Generally, the month of December is subdued for the markets as FII activity will come down during this month. So the next trigger will be Q3 results and the upcoming budget. So I expect markets to show momentum in the later part of December or in the month of January. Now let us look at performance of indices during this week. Nifty gained 90 points, that is 0.37%, and closed at 24,768. Bank Nifty gained 74 points, closed at 53,583 with a gain of 0.14%. Mid-cap index gained 286 points, that is 0.49%, and closed at 58,991. Small cap index lost 0.44%, that is 84 points, and it closed at 19,407. India VIX is slightly down. It has come down by 1.09, that is almost 7% during this week, indicating that the fear in the market is receding and the confidence of the investors is increasing in the market. Now let us look at sectoral performances. Information technology gained the most, it gained 286%. Consumer durables gained 1.70%. Realty sector gained about 1.04%. NBFCs, metals, infrastructure all gained between 0.5 to 0.11%. Media stocks lost about 5.96%. PSU banks lost about 1.88%. Energy, FMCG, oil and gas, pharma all lost between 1 to 2%. Auto sector, public sector companies, healthcare sector all lost between 0.5 to 1%. So there were equal number of advancing sectors and equal number of declining sectors. So that is why I said that market during this week is showing a consolidation. Now let us look at technical charts. This is the daily chart of Nifty. One thing is that last week we have seen it has given a trend reversal with a inverted head and shoulder pattern. Now this week it has consolidated. You can see small red and green candles during this week. And the Friday's market action is very significant. The market dropped up to the low point, that is here, almost by 300 points on Nifty. But during the day, it recouped all the losses, went up and closed at 24,768. That is around 220 points up. So this shows that at lower levels, investors have bought stocks and that has pushed up the market and it has closed with positive gain. That shows the underlying strength or bullishness in the market. So that is why I say it is a buy on dip market. This is the Nifty Mid Cap Index. Here we can see as long as Nifty Mid Cap Index stays above this line, that is 57,750, is a good support for Nifty. As long as it stays above this, it is again a buy on dip. If there is a sharp fall in any of the mid cap companies, good mid cap companies, it is a good investment opportunity. And the overall trend remains up for Nifty mid cap index. This is the daily chart of Nifty small cap index. Here also, as long as small cap index is remaining above this trend line, it is cutting here at around 18,500. As long as Nifty small cap index remains above 18,500, it is a buy on dip market and the view on Nifty small cap index is positive. This is the chart of Bank Nifty index. Here too we can see Bank Nifty has cleared this congestion zone. If we look at the market action on Friday, we can see that from lower level buying has come. That shows that 52,500 is a good support for Bank Nifty, and as long as it remains above this, we have a positive view on Bank Nifty as well. Now let us look at some of the macroeconomic and market fundamentals. Government has appointed Mr. Sanjay Malhotra as the new RBI governor. He comes from within the government administration. He understands the demands from RBI about the inflation and the growth. So after appointment, he has stated in press briefing that he will ensure the policy continuity at RBI. RBI forex reserves is at 654.9 billion US dollars. It is down by 3.2 billion US dollars, mainly because as rupee has depreciated, RBI must have intervened in the market to stabilize the rupee against the dollar. That is why we see RBI reserve down by 3.2 billions. Rupee has, after touching almost 84.90, it has come down because of RBI intervention, closed at 84.79 per dollar. And dollar index is going up. It is at 106.94. So the dollar index going up shows that there is a worldwide demand for US dollars. Brent crude price is at 74.49 per barrel. A stable crude price is good for Indian economy and also for the stock markets. Gold price is at 77,890 for 10 grams 24 carat. So gold price after hitting at around 80,000 for 10 grams, it has come down. It is now steady at around 77,000 to 78,000 level. FIIs have net sold 227 crore during this week. Their selling has come down, and on few days they have bought also. Overall, for the week, they are net sellers by 227 crores. DIIs have bought 2,880 crore in equity during this week. So it shows that on whenever there is a dip in the market, the DIIs have been buying. CPI based inflation drops to 5.48 in November from 6.2% in October. So this is a good development that inflation is coming down mainly because of drop in food inflation. Core inflation is at 3.7% and IIP growth for November 24 has come at 3.5%. We have looked at the charts. Charts indicate positive momentum. Investors should adopt buy on dip strategy, and mutual fund investors should continue their SIPs. And those who have invested lump sum, they should not panic. They should remain invested. So there is a lot of money to be made from the markets for the investors and also for the mutual fund investors by remaining invested for longer period of time. This is all for this week. If you like my video, please subscribe to my channel, share with your friends. You can ask your questions. We'll meet again next week. Thank you.